Very warm welcome to everyone, those who are new to this channel. This is Valgo Station. We are going to analyze how gold can behave throughout the day today. Starting from the 1 hour time frame, the overall market structure is clearly bearish. We can see a consistent pattern of lower highs and lower lows, which tells us that sellers remain in control of this market. The most important area to notice is the supply zone around 4720 to 4740. This is where institutions previously entered heavily sell positions, creating strong downside momentum. When price is returned into this region, it failed to break higher and instead continued downward. This behavior strongly suggests that smart money is distributing positions from premium pricing levels, prepare for further downside movement. Now, if we focus on this area, we can clearly identify a strong break of structure below the previous low around 4665. This break confirmed bearish continuation and showed that institutions were not just reacting but actively driving the market lower. The impulse move that followed from 4660 down towards 4580 shows a strong displacement, which is signature of institutional momentum. Below current price, we also see a weak low forming around 4555. Weak lows typically attract price because they represent resting liquidity. In simple terms, this area becomes a magnet for price, making it a highly probable downside target if bearish pressure continues. Now let's move to the 15 minutes time frame to refine our execution view. Here we can clearly see short-term liquidity building above the equal highs near 4600. These equal highs represents buy stops placed by retail traders who entered early longs. Price recently moved into the supply zone between 4598 and 4608 and shows a sharp rejection wick. This rejection tells us that sellers are still active in this region. When institutions see cultured liquidity above equal highs, they often push price into that area, trigger stops, and then reverse the market. This makes this supply region extremely important for potential short positions. Based on this structure, the high probability sell setup forms within the supply zone between 4598 and 4608. The logic behind this trade is simple but powerful. Price revisits, supply taps into liquidity and shows rejection. The entry should be taken only after a bearish confirmation candle forms inside this zone. The stop loss should be placed above 4618 because if price breaks above this level, it signals that sellers have lost control. The first target sits at 4565 where minor liquidity exists. The second and strong target sets at 4545, which aligns with the weak low and sell side liquidity. The setup provides a strong risk to reward profile and follows institutional logic. However, markets never move in one direction forever, and this brings us to potential buy if price continues lower and taps into the demand zone between 4548 and 4555. We expect a possible reaction from buyers. This zone represents an area where institutional may accumulate positions after sweeping sell side liquidity. The buy entry should be triggered only after bullish confirmation such as strong rejection wicks or bullish displacement candles. The stop loss should be placed below 4538 to protect against deeper continuation. The first upside target sits at 4585, which is the previous consolidation area, while the extended target sits at 4605, aligning with the short-term liquidity highs. This setup captures potential reversal momentum after liquidity sweep. If this video have produced value to you, hit that like button, and if you are new to this channel, please subscribe to the channel.